Hello, friends. I'm Giuliano. It is a Thursday. It's the 13th of January, and I'm here to share with you, talk about Bitcoin price action and currently see what we're seeing and where we might be going. So yeah, let's jump into it. I'm going to share this screen and we'll get into the Bitcoin price chart. We are now trading just below the 43,000 level. And recently we went about as high as, what's that? Oh, about 44,000. So that's pretty good. I just would like to say that we're basically still pretty clear on the count. It's not, yeah, it's not a problem that the price is moving the way it is. In fact, it's pretty much expected that we're going in this way. So there we go. That's better. That's what I wanted. So look, what is going on here? We traded up into this 44,000 level, our first, how do we call it, zone of potential resistance, and there we go. And so here's what I think could be playing out, okay? If we are to maintain the C wave, five wave Elliott wave impulse, okay, neo wave style, if this is in fact a C wave right here, okay, then we would expect either we're in this fourth wave of the bigger degree to then see a fifth wave, or, and what seems more and more likely now, is indeed the integrity of this 0 to 2 trend line on this third wave of the red degree here. It could still be just in the fourth wave of the smaller green degree here. I hope that makes sense to you, but basically because of this 0 to 2 trend line here, we are only just breaking out of it. And that says, okay, we're potentially still in this smaller degree of a fourth wave, because we haven't quite established a 2 to 4 trend line unless it goes because we didn't break the 0 to 2. So that's what the neo wave logic allows. That's what I really appreciate about that kind of logic as well. It gives some certain rules for ideas and confirmations. And so the other thing though is maybe this isn't overall a C wave in a flat pattern, but instead it's a C wave in a upward sloping triangle pattern. And in that case, this would just be some form of a 3, not a 5, okay? And the 3 could be just a simple ABC zigzag, or it could be, well, in that case, it wouldn't be that big, right? We went 1, 2, and this would be the end of it. If we are ending it, if we are doing a triangle, we can't really expect to be going much lower than that. Otherwise, we're just falling into the flat pattern territory. And we're also making more waves, which look more like an impulse pattern. In which case here, we could still argue, that there's this potential that maybe this is just some sort of complex correction. So it doesn't even have to be a simple ABC, where the C wave barely moves below that A wave on a price trading basis. Instead, it could be a complex correction where this is some sort of ABC move, and then we get an X wave and then another ABC move, and we're out of it. And yeah, so that could totally make sense. And I'll just take a brief look at that afterward, but we're going to stick first with this count. Okay, so potential C wave here. Potentially we're in the fourth wave of this smaller degree, and it feels like that as well, just because of this potential 0 to 2 trend line. So that's that's why we're sticking with that thesis for now. Okay, we're always open to a few. That's why you always have a few options in mind as you're looking at balance of probabilities, and always adapting to the price changes as it happens. But incredibly, we made it to this, which was about 1,618 to 1 if we count the first move up and down. So I'll just review that with you here. So the basic idea from a closing basis, we made a turnaround. Oh, that's the wrong tool. That's the time tool. We're looking for the price tool. Stick around for more ideas about time. Anyway, so here if we take it to this height, we have made a 1,618. So either we've made some sort of like a bit more complicated, complex, subdivided, intricate 3 wave, like a zigzag, already completed, and now we're gonna make the next move down and then another move up. In which case, sorry, what I mean to say is if it's a zigzag, we'd be making some sort of 1, 2, 3, 4, 5. But because they're all 1-to-1, if you measure them, it's not really a zigzag. Maybe it's like an A, and then, yeah, like you could subdivide it how you want. A, B, C as an A, and then a B and a C to make something complex. But like people count things all kinds of ways I've seen. So nevertheless, what to me is important is that we did the first move here and we went 161.8 towards that. So in my sense, this move is complete. We are retracing that move. And my guess is we're going to make some form of zigzag or something a bit more angular to the downside compared to this compared to this 1-to-2 wave, which itself was very similar in characteristic to this bigger 1-to-2 wave. Anyway, that's what I'm seeing here. And so in that case, we're going to measure this one here, and it's going to come down. And look, we are getting a good level of support resistance here. So we definitely want this level to hold. Otherwise, we might already be done the fourth wave, okay? And onto this fifth wave already, but I'm doubting that, okay? And so, especially because it seems like the market, wants to give, there is room here to get to for the price before people would more likely have more sell orders to get out of their position. Because really realistically from the bottom, we'd be talking a good 10% move. So why not for traders? And also it allows people to get out where they feel like, look, there's some resistance here. Let me get out for now and see what's going to happen, that kind of stuff. There's all kinds of reasons. And people, interestingly, are trading and investing on different time horizons with different motives and needs and desires and that kind of stuff. So it all comes into play and becomes this incredible price action market structure. And the one we see before us here, okay, looks like it's in this fourth wave. So I'm going to hide let's go to settings. Oh, I'm not even on the chart I want to be. Let's move into our loaded chart layout. BTC most recent 4-hour daily weekly. And yeah, so here we are. So on the daily, we see this 2-to-4 trend line, 0-to-2 trend line, okay, broken. And as we saw on the 4-hourly, we've broken it to the upside, matched some resistance, coming back to test this line. I'm going to guess it's going to be some sort of support, and then we're going to go higher. So let's go to that 4-hourly again. That's my guess here. There are other possibilities. One of them is that we're just starting a bigger move to the upside. And then the other one is that we're starting a more intermediate move to the upside as part of a D wave of a bigger ascending triangle. Okay, so let's jump into this and say, if we are indeed roughly going to support around here, okay, we've made our move up, let's say some sort of A, and now we're in some sort of B, wherever that's going to take us, but maybe we'll call these levels as a good support line, and we'll take an internal relationship fib extension to the next level, and it's going to come around here on the closing basis as a 1-to-1. So we're going to do that 1-to-1. So that 46,000 level is definitely a good 1-to-1 zigzag type of move. And if it's going to get up 161.8, that's reasonable, and you're in this kind of chunk of territory. And for some reason, we'll know it's a much stronger move if it goes 2618, and then we're going to say, okay, maybe this whole 5-wave idea is getting broken down and isn't as valid anymore. We'll see. But my thinking is 46,000 is really a good zone for closing price, and maybe as we see with the wicks, we're going to get a 1-to-1 up into this 47 or 48,000 level here, when we use the wicks down below from the candle price action. So that would correspond to a 161.8 if it were to close around there. So either trade or close around this 47, 48,000 level, still possible within this framework of that move there. So what I wanted to do was just, actually we'll leave it in. I was gonna just remove the line here, but let's just leave it in for visual purposes and say, okay, if we go to the candles now, let us take, again, that relationship. We'll go to the wick roughly, okay, and imagine we get some sort of support here. Again, that 1-to-1 relationship takes us to the, let me just make sure I'm doing that correctly. down there. So roughly here. Oh, that's why. Okay, so the reason. Okay, yeah, fine. You get to your 47,000 1-to-1. Okay, and like a 50,000 if you're really going 161.8 on a trading basis, right? This could just be within 4 hours you might get a wick. This is 4-hour candles, not daily, right? So we're not even looking for a daily close here. We're looking for a 4-hourly close. That would be a 161.8. But a wick, especially since we're measuring with wicks, we would expect more like a wick up here. And if anything, a close at this 1-to-1 level. But even then, that would more likely be a wick because we're using wicks. So that kind of makes more sense to me. And also on top of that, what I wanted to share is really if we go into like a lower time frame, I bet this is not really the beginning of the move, especially because, well, actually, I don't want to say I bet. That's not the right language. But my sense is the move starts probably more around here anyway, just because of what happened up here with the rejection. But then again, we can argue that it starts here. So fine, we're probably going to argue it starts here. I think I'm going on to a tangent, but doesn't even matter. As you see the levels, it's not about hitting an exact line. It's more so about levels and getting a general sense of the market price action. So anyway, this is quite interesting what we're seeing so far. Move up, move down, move up to get beyond the potential 0 to 2 trend line here, this 0 to 2 trend line here. And after the 3 wave, moving into a 4 wave on this smaller degree, finishing off, looking to eventually finish off the 3 wave, maybe over here somewhere, and then move into that bigger degree 3 wave, move into the bigger degree 4 wave. And, that takes us into the end of January potentially. So we'll see what that looks like. So stick around for more if you're interested to watch how it plays out along with me. But these are some key levels now to look for as resistance levels that turn into potentially this 5th wave. Like we're going to see after these pose resistance, that's going to be the big deal. That's going to be a big deal because at the same time, it's going to have to come back up, and even, no matter where this 5th wave goes, the price is still going to have to come back up. Maybe the 5th wave makes a higher low. That's the most bullish case, is after the resistance here comes back down, makes a higher low. That would be more bullish. Okay. Anyway, so that's some thoughts around that. I also think based on some of these lagging indicators, there's definitely more room for the RSI to keep going towards an oversold level. Last time it was oversold was back in late December 2021, and that's barely oversold, So I say oversold. If you already thought about it, I mean overbought up at the higher end. And same thing with the MACD, however, it has been ranging in positive momentum for a little while. So maybe it is going to start fizzling out a bit bigger. Maybe it has a little bit more to go in the positive side like that before it goes into the red negative. But that's why it also seems like it's following some of the price action that we think is going to create the structure that we are watching potentially unfold. So there you have it. I think that's all I really wanted to say and more about this 3 to 4 wave on the smaller green degree. The 0 to 2 trend line, we have broken it, and we are now testing it as support. And so everything is as it might be expected to be for now. Okay, stick around for more and let's see what happens. I'm going to just go to, I'm not going to worry too much about time. I think price levels is more helpful for us right now. And I want to go into, so we'll just take a look again from the daily and say, this is where we are. Okay, this is where we expect to be at some point, which is, anywhere around like 38,000, 37, 36. But by then, there is a strong chance we could make it down to this around 33,000 level as an 88.6% retracement on the daily level for this previous move from the B wave move, or maybe even just the 30, 38, 37 level around this 78.6 retracement. That's fine. That could easily be a 5 wave ending. The 3rd wave ended here around like 39,000, let's say, potentially. Or, well, the 3rd wave, if we're there, like we have, that's the thing, is like, have we even finished the 3rd wave? So this 3rd wave could either end around here or a little lower. or maybe a lot lower down here towards the 37,000. We're going to see what the length of that potential smaller degree fifth wave here, the green degree fifth wave. We're going to see what length it is. But if it's going to follow, you know, we have this. I'll show it again, I guess. We have the 1, 2 is roughly like this. Okay, to the 3 is not even more than 1. Like it's barely 1 to 1. It's more than that, but it's not solidly a huge 1 to 1. Like a 160, 1.8 to 1. So let me just do that again for you. And let's just go from a closing basis just to see. Okay, we'll go from a candle basis just to see. So we're going to pop it down here. So we are going to go, oops, 1. And then the 3 starts here because of this 0 to 2 trend line that gets formed. And if you want more ideas about that, check out Neo Wave ideas or check out some previous videos, or I can just put a request in the comments. Hey, make comments. Yeah, so I mean, that's decent, but okay, fine. So then the fifth wave is maybe going to be comparative to the third wave. So let's say the third wave was that from about here to here on a trading basis. And let's say it goes up to here, which is about 47K, 46K. That's like a conservative level here. Let's go 47.5 just for fun. So 61.8 of that move only brings us to 42,000. So I don't know if that's the case. And at 161.8 brings us to 36,000. So it'd either be something smaller than 1 to 1, or it'd be bigger. And in my guess, it would probably be bigger. So there's a chance, because again, yeah, if the prices come in and test these levels again, it's got to break down. It's not just going to bounce on the same level at this point. If we're still only in this red third wave and we're finishing it off, then yeah, I can't show too much strength yet, I imagine. So, okay, maybe this type of level is reasonable, this like 38 or 37 level. If this is what we're playing, right? We don't know yet. We do not know yet. So for now, that's what we're going to stand with. And if the price doesn't go there, but instead, let's say is a little less of a retrace, and it only goes, let's say, to the 45, 46 level, then 1 to 1, yeah, again, not, because you don't want to see too much 1 to 1. Like you already have the 1 wave is so close to the 3 wave. You need some sort of extension or something reasonable there, and maybe it will look a little bit more like this or something where it just dumps. That's possible. Let's watch it. Okay, that's it. I don't want to talk too much about that. We're going to see as it goes. We're still in this potential fourth wave of this green degree. That's really all we got to say right now. Then once we potentially turn around here and are looking at a fifth wave, we can start looking at that and watching that unfold. Now, I think that's what I'm going to do now is just save this. Thank you very much. And we're going to go towards the chart that I called test 2. And that's where we're going to see the potential for test 2. That's where we're going to see the potential for this uptrending triangle. We're really breaking it down. Like it's really not, you know, looking like it's going to hold this 61.8 level, and it just changes it more and more into a potential ABC flat pattern rather than a rising ABCDE. And we're just going to be interesting to watch this weekly candle play out. This is a weekly chart, by the way. It'll be interesting to watch this weekly candle play out because currently, you know, in my mind, in my opinion, and many technical analysts much better than me. And by the way, none of this financial advice or anything. Obviously, I'm not saying anything. Anyway, you know that. But well, this candle looks like one of those intermediate pause candles, similar to this. Now, I know this is still Thursday, and we have about 5 hours remaining in the day UTC time for the candle close. Oh, sorry, on the daily. That would be on the daily. My bad. So I'm not even saying. So that would be this candle here on the daily. On the weekly though, yeah, when on Sunday, when this closes, I should say, so 5 hours today, and then another Friday, Saturday, Sunday, 72 hours. So about 77 hours before we close this candle here. And when that happens, is it going to be like one of these intermediate candles? Because then that's a very clear sign that it's going to go lower, that this move is not done all the way down. It's not impossible that this be a finishing candle for the move down and then we start moving up. It's for sure, it's possible, but it's much less likely. It's much less carved out. Like a candle like this is much nicer as one of those things. Like, take a look at that. That feels better because you have the wick, the wick. Oops, that's not what we're looking at. This one, you know, the body and the wick. Just stick with me here. I'm just trying to get rid of this. That's the candle we're comparing to where we are this week on an inverted scale. You know, this looks more like a turnaround candle where the body of the candle is at the upper end of the candle and the wick is at the lower end, and it's green. That's great. But yeah, that, you know, this is more of a turnaround candle in my opinion than this one. But having said that, again, we are just in the week now. We have 77 hours remaining, so there's anything can happen. It can look all kinds of ways. Yeah, so that's that. That's the idea of this potential triangle pattern that we're trying to see formulate here. So maybe, but doesn't quite look like it anymore. But then again, the market is never perfect. It's never going to perfectly land on 61.8% and in time and price and just follow textbook. It's more like a fractal or some sort of, how do you say, instantiation of the theory. You know, it is an example of the theory, and the example is always very precise and specific and unique. You know, it's always unique. And in that way, it can't be exactly like the example. The example is some sort of more, how do you say, generalized format. So having said that, yes, we could still be in an uptrending triangle. My bias is towards the flat pattern. And I've said why before. If you want to check that out, you'll see some more of those previous videos. And I think I've taken way longer than I expected to for now, but that's fine. I enjoy being here. I enjoy doing this, and this is helping me have my own thought process in the meantime. Let's check Ichimoku. Let's add that in. Moving average and Bollinger Band. Cool. Anyway, let's see what happens. It's a definitely fascinating situation. When we take out the Bollinger Band and then put it back in, we see that on the weekly level, like, look how, sorry, Bollinger Band, I meant Ichimoku Cloud. Look how beautifully the price was able to support at the Ichimoku Cloud on a closing basis. That's incredible. So yeah, some of these tools can be very helpful at times. And just within the cloud, you know, anyway, just something to watch, something to consider, and good luck out there. Wishing you all the best, and stick around for more if you want to hear my thoughts. And yeah, that's all I got to say for now. Stop sharing the screen. I'm going to just say goodbye. Yeah, wishing you all the love, peace, and happiness that you can manage in whatever scenario you find yourself. All right, take care. Bye.